Good morning, everyone. This is the report of Group 3, Module 4, Lesson 2, Taxation. So, my name is Daisy Salos, and I will be discussing the introduction of taxation and the taxes owed to possess the following characteristics. So, what is taxation? Taxation is an inherent power of the state acting through the legislator to impose and collect revenues to support the government and its recognized objects. So, taxation is the lifeblood of the state. So, the power of the state to collect revenues for public purposes. The money raised from the taxation support the government and allows it to fund police, court, have a military, build and maintain roads along with may other services. So, it is therefore necessary for the people to pay taxes. So, the benefits of taxation is that it is revenues for financing public spending including buildings, roads, school buildings, and hospitals for other local government services including police, fire department, and parks, playgrounds, and public libraries. Next is taxes ought to possess the following characteristic. First is enforced contribution. Due to critical rule, taxes play in a state, tax cannot be imposed as voluntary contribution or donations. All citizens with respect to their ability have to pay taxes. So enforced contribution is a mandatory process. It is an enforced contribution for its imposition is no way dependent upon the will or assent of the person's tax. This is why some hold that extreme view that taxation is robbery or it is because it taking of a property without against the will of the owner. Next is payable in money. A tax must be discharged alone in money which must be in a legal tender. Legal tender is anything recognized by law as a means to settle a public or private to meet a financial obligation including tax payments, contracts, and legal fines or damages. Proportionate in character. Taxes are based on the ability to pay. A tax is laid by some rule of apportionment according which persons share the public burden. It is ordinarily based on ability to pay. Thus, in practice, some people pay very high taxes, others may very small amount or none of all. So, proportionate in character, it is based on the character of a person of how much they pay that taxes. 4. Impose on persons of property. A tax may be imposed on act, transactions, or contract. It is a tax may also impose on a right of or privilege of a person to pay that taxes. The property is asserted for the purpose or of ascertaining the amount of tax imposed by the state which has a jurisdiction over the person or property. So the object to be taxed must be subject to jurisdiction of taxing state. This is necessary in order that the tax can be enforced. Although a state can tax all a person subject to its jurisdiction for all their property left by them within its jurisdiction, imposed by the law-making body of the state. The power to tax is a legislative power which under the Constitution only Congress can exercise through the enactment of tax. Accordingly, the obligation of tax it is a liability. The kinds of taxes under existing law. First is national taxes. These are imposed and collected by the national government through the BIR. So national taxes refers to the taxes imposed by a central government on its citizens and businesses to generate revenues for public expenditures. The collected funds are used to fund government operation, public services, infrastructures, project, and social welfare program. Local taxes imposed by the government to meet particular needs under the Local Government Code RA 7160, such as real property tax and community tax. So local taxes are governments such as municipality or counties to finance local services and projects. These taxes can include property taxes, business taxes, and other fees. The revenues generated from local taxes is primarily used to fund essential services like education, public safety, maintenance, and community development.
Good afternoon everyone, I am Jelati Calonia and this is the continuation of our report entitled Purpose of Taxation and Classification of Taxes.
Purpose of taxation. First, equitable distribution of the wealth of the nation. One of the purposes of taxation is to distribute the wealth equally to the different parts of the nation, to ensure the improvement and development of the nation and support the building of infrastructure. Second, protect local industries from foreign competition. Of course, the taxation implemented in our country helps to protect and build a barrier from the foreign competitors to ensure the progress within our country. Last, uplift social conditions as in the case of regulatory taxes and the exercise of police powers. The infrastructures that we are witnessing nowadays are from the tax of the people, and through providing laws and regulations, we can effectively ensure that there is always a budget for the building of different infrastructure that are really important. With the help of the police power, the taxation can be effectively implemented, as I said earlier. Classification of taxes as to subject matter or object. First, personal, full or capitation tax. Fixed amount imposed on an individual residing within a specified territory, regardless of property or the occupation they engage in. An example of a personal tax is the income tax that individuals pay based on their earnings. A historical example of a poll tax is the head tax imposed in certain regions, where each adult had to pay a fixed amount regardless of income. Second, property tax, the amount imposed on the property, usually a real estate. An example of property tax is the annual tax assessed on the value of real estate, such as house or land. Homeowners typically pay property taxes to local government authorities based on the assessed value of their properties. Last, excise taxes. Taxes paid when purchases are made on a specific good, often included on the price of the product. An example of an excise tax is a tax imposed on specific goods such as cigarettes, alcohol, or gasoline. These taxes are often included in the price of the product and are paid by consumers at the point of purchase.
Good afternoon everyone, I am Rizan Zidadulo, it's RM1B. I'm going to report our topic. So my topic is all about as to purpose. Number 1, general fiscal or revenue tax imposed for the general purpose of the government to raise funds for their needs. So kining general tax is this tax is for the overall needs for government. So ang kani nga tax is ginagamit ni para sa kalsada, for example eskwelahan, para sa tuwaron nga way na ni eskwela college, para sa atong elementary, high school, and public hospital, and more na ang government na nagamit. So number 2 is special of regulatory tax imposed for a special purpose. So while ang special tax is collected for a specific purpose, like for example sa bugak, di ba, if maligo ka diya na entrance fee, so kanang nakulik nila nga kwarta or tax is para sab na sa bugak aron ma-improve ang bugak ug ma-attract more tourism. So as to scope or authority imposing the tax, number 1, national tax, number 2, municipal or local tax. So ang national tax is para sa isa ka country nga tax, ang maggunit ana is ang central government, while ang municipal tax or local tax para sa municipality or local nga tax, ang government or mayor usually gagunit ani nga tax. Example sa local tax is list of local taxes, stamp tax, bicycle license tax, land value tax, agricultural land tax, land value increment tax, house tax, deed tax, amuse tax. So my topic is all about general fiscal revenue tax.
Hello everyone, I'm Alanji Salamanis and this is my topic as to who bears the burden. So, direct tax. Direct tax is a tax that a person or organization pay directly to the entity. It's like entity that imposed it. Example include income tax, real property tax, personal property tax, and taxes on assets, all of which are paid by an individual taxpayer directly to the government. So, number 2 is indirect tax. So, indirect tax is imposed on one person or group like manufacturers, then shifted to a different payer. Usually, the consumer rather, like unlike direct tax. Indirect tax are live on goods and services, not individual payers, and collected by the retailers and manufacturer. That's all. Thank you.
Morning everyone, I'm John Brian Castilla. Today I'm going to discuss the donor's tax, value-added tax, withholding tax. Donor's tax is imposed upon any person, natural or juridical, resident or non-resident, who transfers or causes to transfers by gift or donation, whether direct or indirect, in trust or otherwise, real, personal, tangible, or intangible property. Donor tax is a tax on gift giving during someone's lifetime. It's imposed on the donor based on the value of the gift and varies by region. Example, if you give a friend a $100,000 property, you might have to pay a tax on that gift depending on the rules in your area. Value-added tax is a form of sales tax. Value-added tax is a consumption tax on goods and services such as production stage. Businesses collect and remit it, with the final customer bearing the tax burden. Withholding tax, the amount of an employee's fee withheld by the employer and sent directly to the government as partial payment of income tax. Withholding tax is a deduction made at the source of income, typically on interest, dividend, or services. Employers or financial institutions withhold a portion and remit it to tax authorities, ensuring prepayment of taxes by the recipient. Example, when a company pays dividends to its shareholders, it may withhold a percentage for taxes before distributing the remaining amount to the shareholders. The withheld tax is then forwarded to the tax authorities by the company.
Good morning everyone. My name is Fridel Tulaytay from HRM 1B. So today I will discuss or report to excise tax, documentary tabs tax, costume duty, travel tax, energy tax, and private motor tax. So number 6, excise tax. So is an direct tax. So dili patong sa presyo sa products where the government decide to put an additional price in the sales and products. So sample of excise tax. So the government impose or magdungag siya og 1 piso per cigarettes, and then 1 pesos is sa excise tax. So ang government mupatong sa price ng each cigarettes. So the company of cigarettes decide to make a pack of cigarettes that costs 2 pesos. So 1 piso sa government na mupatong, and ang maghimuay sa cigarettes is maupod siya ay 1 peso. So the manufacturer of cigarettes maghimuay sa sigarilyo kay magbaligya siya 2 pesos per cigarettes kay para pod siya na ginansya or na siya profit. So mauna siya ang excise tax. Pero naman po sa number 7, documentary stub tax. A tax on documents, instruments, and papers evidencing the acceptance, assignments, sales, or transfer of an obligation right to property incidents theory. So, ang pasabutan ni is a type of tax made by government to fees or having fees on various documents, instruments, loans, agreements, sales, or transfer of an obligation, rights, or property. It is often collected on legal documents to make them inferable and serves as way to government to generate revenue from certain transaction. So, muna siya ang documents sa mga record sa transaction about ni sa mga loan, lupa, business building, o kanang mga legal na pamaagi na gina-provide sa government. So, sample ani sa documentary stub tax. So, if, for example, is Sibon is na ay ginabaligya sa siya nga lupa, and then ako mo palit, so maghimo mi og legal na kasulatan about sa transaction, kung pila ang amount sa lupa, og ngalan sa tag-iya, og ngalan sa nagpalit. So, ang government kay ang mag-provide sa legal nga kasulatan og agreement na pinaagi sa papel na provide na ang amo pirmahan. So, ang documentary stub kay ngani siya mo process or mo process sa among agreement, tapos ang agreement maka-decide ang government kung pilang ang tax na ibutang sa lupa. So mao na ang business permit na kinahanglan nato is magbayad ta every year. So mao na siya ang documentary stub. So dili na pud sa custom duty. So is a traffic of tax imposed on goods transported across international boundaries. So, custom duties is talks about the import and export of products in other countries. This tax is where the government impose tax through so ang traffics kay dili kay taga-protekta sa mga products na gina-deliver sa laing lugar without traffics. So dili jud sila makalapos sa pag-deliver. Kay mao na ang nganong reason mahal ang products pag abot dire kay gikan man sa gawas kay daghan may sila'y kanang kinahanglan na bayaran ang gobyerno para ang iyang product is ma-protect. So mao na siya ang custom duty. So another na pa is travel tax. So mao na siya ang travel tax kini. So is a levy imposed by Philippine government on individual who are leaving the Philippines, and irrespective of the placement where the air ticket is issued and form or fleece of payment as provided by Credential Degree 1183. Ang is an tax where a person wants to go out of country. This tax happen when buying a ticket in a placement or payment. The additional amount provided or needed to pay before you bought a ticket as simply a travel tax. This tax used the refund the government and provide into the development of tourism, improvement, facility, and etc. Because the tax were collected becomes the money of the government to maintain the stability of the economy of a nation. So mao na siya ang tax mahitabo lang ni siya sa mga travel if kung gusto ka mo adto sa gawas. So mao na siya ang natay bayaron sa airplane ticket kay mao man siya process nga kinahanglan nato bayaron ang atong mga travel tax. So manong mga passport, so nijud nato na mobayad para makaadto ta sa gusto nato adtuan. So mao na siya ang travel tax. So diri na pud sa energy tax. Tax are imposed to discourage the uneconomy consumption of fuel and the need for additional revenue to support economic development. So energy tax is mao na siya ang about ni siya sa gasoline or fuel nga need sa country. Sample ani is Saudi ang source jud sa gasoline, no. So tapos ang Pilipinas kay daghan may sakyanan diri nga daghan may factory nga sakyanan na kinahanglan jud nato gas or fuel. So para mag-work ang isa ka factory og mga sakyanan na part sa panginabuhian pud sa tao na kinahanglan sa Pilipinas ng supplier ng fuel. So ang importation kay sa government mag-add ng tax sa traffics. So para ma-protect ang products na ginapadala diri sa Pilipinas. So mao na ang travel expenses tungod kay ang gasto sa pag-deliver mag-additional na price para dili magansi. Ang pag sa tag-iya sa gasoline kay ang kumpara naan is like for example is 50 liter and ibaligya pod nila diri is 60 per liter para pod na siginan siya. So mao na siya ang energy tax. So in the last is private motor vehicle. The tax that was issued to rationalize the structure of the tax on private motor vehicles by passing the same on ability to fee of the owners. So private motor is diri jud sa Pilipinas is gina-require jud nato sa gini-require jud sa LTO nga kinahanglan is mo kuha ta og legal nga kanang like for example is magpalisensya ta, rehistro. So kailangan jud nato na is magkuha or magbayad ta ana sa nga tax kay para pod ang atong pag-drive is legal. Tapos ang purpose pod ana nga nang magbayad tag tax kay para naatay kanang government na og kanang naay masustain sa roads or ma-upgrade para nindot ang atong magyan. So mao nang atong ginabayad is naay gyapon paingon. So mao na siya ang private motor vehicle. So that's all. So thank you everyone.
Good morning everyone, I'm Charles Pangan from HRM 1B and I will be discussing about the income tax, the difference between fiscal year and calendar year, the optional standard deduction and itemized deduction. Income tax is a tax on a person's income, emoluments, profits arising from property, practice of profession, conduct of trade or business, or on the pertinent items of gross income specified in the tax code of 1997 as amended, less the deductions if any authorized for such types of income by the tax code as amended or other special laws. When we say income tax, meaning it is a tax imposed on individuals or entities or taxpayers in respect of the income or profits earned by them. It is commonly called taxable income. Taxpayers must file an income tax return annually to determine their tax obligations. Deadline of filing of application of annual income tax return for a fiscal year can start and end at any point during the year as long as it compromises a full 12 months. Filing will be on the 15th day of the 4th month following the closing of the taxable year. Fiscal year is a 12-month accounting period that a business uses for financial and tax reporting purposes. A fiscal year is also known as a financial year. It is mostly common use for accounting purposes to prepare financial statements. Although fiscal year can be different to a calendar year, it doesn't need to start on January 1 and end on December 31. B. Calendar year. A one-year period that begins on January 1 and ends on December 31. Filing will be on the 15th day of the 4th month following the closing of the taxable year. The calendar year refers to a one-year period beginning on January 1 and end on December 31 based on the Gregorian calendar. The calendar year commonly coincides with the fiscal year for individual and corporate taxation. It is also known as the civil year. What are allowable deductions to gross income? A. Optional standard deduction. An amount not exceeding 40% gross sales or receipts for individuals and gross income for corporations. Optional standard deduction. Instead of tracking all your expenses with OSD or optional standard deduction, you can simply declare that 40% of your income is your expense. That means 60% of your income is taxable. This type of deduction shall not be allowed for non-resident aliens engaged in trade or business. So, what is the purpose of standard deduction? It reduces taxpayers' taxable income. Example of standard deduction. A married couple filing their 2023 tax return jointly with an AGI of $125,000 is entitled to a standard deduction of $27,700. This tax breaks reduces their taxable income to $97,300. B. Itemized deductions, which include the following: expenses, interest, taxes, losses, bad debts, depreciation, depletion of oil and gas wells and mines, charitable contributions and other contribution, research and development, and pension trust. Itemized deduction is an expense that can be subtracted from your adjusted gross income or AGI to reduce your taxable income and lower the amount of taxes you owe.
Good morning everyone, I am Von Euler Pacon from HRM1B and I am now going to report about the income tax rates. Income tax rates. Income tax rates are for individual citizens and resident aliens earning purely compensation, income, and individuals engaged in business and practice of profession. In other terms, income tax is a type of tax governments impose on income generated by businesses and individuals with their own jurisdiction. Income tax is used to fund public services, pay government obligations, and provide goods for citizens. So, the source for the government funds are mostly from the income tax. Income tax are to be paid with professionals, businessmen, and other earning sectors. I will show you the table of the graduated income tax under the section 24A2 of the Tax Code of 1997 as amended by Republic Act number 109. So, for the individuals earning not over 250,000 a year is exempted from personal income tax. And for those who are earning 250 but not over 400,000 will have the tax due of 15% of the excess over 250. So for example, if your income is 350,000 a year, then the income tax of 15% will be multiplied by 15% of the increase up to 50. So if 350,000 is your annual income, the 100,000 you're going to pay a 15% for the 100,000 existing. Next, if over 400,000 but not over 800,000, a 22,500 plus 20% of excess over 400,000. Next, if your income is over 800 but not over 2 million, the tax due will be 102,500 plus 25,000 plus 25% of the excess over 800,000. And if your annual income is over 2 million pesos but not over 8 million pesos, your tax due will be 402,500 plus 30% of the excess over 2 million pesos. Last, all the annual income that is over 8 million pesos, the tax due will be 2,202,500 pesos plus 35% of the excess over 8 million. Next, for purely self-employed individuals and or professionals whose gross sales, receipts, and other non-operating income do not exceed VAT threshold of 3 million, the tax shall be at the taxpayer's occupation option. 8% income tax on gross sales, gross receipts in excess of 250 in lieu of graduated income tax rates and percentage tax or income tax based on graduated income tax rates. So, for those self-employed individuals, they have the right to choose where if they want to pay 8% of income tax on gross sales or gross receipts and income tax based on the graduated income tax. Example, income tax payable gross of sales of 2.5 million with dividend income of 500,000, compute using the provincial tax rate. So, the gross sales and receipts is 2,500,000 and the non-operating income is 500,000 pesos. Gross taxable income is 3 million pesos, less the amount allowed as the deduction per section 24 of NIRC as amended, 250,000. The net taxable income is 2,750,000 times 8% the tax rate. So the income tax due will be 220,000 pesos. Income tax payable is 220,000 pesos. Take note that the tax withheld is only for those deducted within the year, monthly, quarterly, and some annually. In our two examples, we did not put tax withheld for we were computing the income tax payable annually. And that's all. Thank you.